okay, we're going into a recession. In fact, we may already be in one because permanent job losses have been picking up really for almost 2 years now. And that particular team thinks inflation and interest rates will surprise on the low side of expectations. So the bottom line here is lots of uncertainty. And so I think the markets, both the fixed income and the equity markets, are grappling with this uncertainty.
In this recent interview on the ARK Invest YouTube channel with Cathie Wood, we explore the evolving economic landscape. Topics include rising concerns about a potential recession, the transition to a new administration, and the key policy decisions that could shape the future. At the time of this discussion, Bitcoin is trading around $91,000, with a 3% decrease in the last 24 hours and a 9% decrease over the past 30 days. Before we move forward with Cathie's insights, don't forget to like, subscribe, and share this channel. Now let's hear more from Cathie Wood.
0.3% month to month, but on a year-over-year basis, we finally broke below 4%. Now, we'll get to this in the charts in a minute. If productivity is actually 2% or more, that lower than 4% on the average hourly earnings would suggest that underlying inflation or unit labor costs are below 2%. So the Fed's very focused on labor costs. Productivity is a big part of that. Hours worked pretty flat, but by and large, a strong report suggesting that income growth will continue. Now, throughout the month, there were puts and takes. For example, the claims and the employment report I just mentioned and job openings, those all have been better than expected. But the quit rate has come down. The quit rate is really as low as it usually gets as we're entering a recession. People do not quit if they do not believe they can find a better paying job elsewhere. So that's an interesting juxtaposition, as is retail, or as are retail sales and consumption broadly, better than expected, but we have production weaker than expected. And probably one of the most surprising numbers I've seen recently is an outright contraction in credit card debt for the month. That's unusual as well. There may be some kind of anomaly, but thought that was interesting. The other thing is employment being strong as it is, and yet productivity also being strong. So that's interesting. If you think about economic growth, what is it? It's usually, if you think about GDP, it's growth of employment plus productivity is basically how you can sum it up from a high level. And both seem to be pretty strong. So why has there been such consternation? If you look at the sentiment indices, certainly last year they were terrible for most of the year for small business, for lower and middle income earners. That sentiment did start to pick up after the election, but in recent days, we just on Employment Friday got the consumer sentiment measures, and they've slipped a bit here. And I think what is happening is the euphoria after the election has drifted into uncertainty about what's ahead now that the transition is in place, and we're hearing a lot of talk about cutbacks in government spending. Those are jobs for some people, at least, and tariffs. That's an inflation fear, and that came through loud and clear, as I'll show you in the charts in a minute. There's a great fear that inflation is going to go through a resurgence here, and certainly that's what the headlines are blaring as commentators talk about tariffs and the saber rattling around them. So what I'd like to do now is go into the charts. As I mentioned, we're seeing mixed and some conflicting evidence. By and large, headline numbers will continue to move forward, but when you look underneath the headline numbers, there are some contradictions, and I think the uncertainty is picking up here. Just to give you a sense of that, as we've listened to various forecasters at the start of the year, you've got some saying that we are entering into a very strong recovery where inflation and interest rates will pick up significantly. So that's one point of view. We have another point of view, which is that deregulation and tax cuts will be a high priority and will dominate tariffs and immigration reform, which will be very good for the markets.
As we just heard Cathie Wood discuss the challenges of navigating a potential recession and what the economic transition could mean, now let's hear her thoughts on how government spending and policy changes could shape the financial markets and beyond. Now let's listen to what Cathie Wood has to say.
The fixed income markets have backed up. Interest rates have backed up with the talk of tariffs and inflation, and perhaps out of fear that what we saw in the first Trump administration, which was spending, will recur despite DOGE, the Department of Government Efficiency. Now, we don't believe that, but interest rates are up nonetheless. And then equities are equivocating, I would say here, just waiting to learn more, especially as we get to January 20th. And I would say from our point of view, the most important thing that this next administration needs to do is bring clarity to the conversation. If tax cuts are going to be enacted, will they be retroactive to January of 25? And I know Scott Bessent has been talking about that, so that's good. Half of the solution is understanding the problem. But if tax cuts, if there is not that clarity, we can see a lot of deferral of activity, both from businesses and consumers, until there is clarity.
To watch the full interview, check out the link in the description. We would love to hear your thoughts on some questions. How do you think the new administration will handle inflation concerns? What steps should investors take to prepare for economic uncertainty? Thank you for tuning into Only the Savvy. If you enjoyed this discussion, please subscribe, like, and share our video for more engaging content exploring the innovative world of decentralized technologies. SIM swap fraud is sweeping the globe, and your mobile security is at risk. Switch to Ifani and lock out SIM swap fraud and get the most elite mobile protection in the world. Ifani guarantees 100% protection from SIM swaps, backed by a $5 million insurance policy. Stay secure with reliable coverage, free international roaming, and unlimited data. Trust Ifani to keep your communications and assets secure. Get military-grade protection, 24/7 concierge service, and a hassle-free upgrade. Click the link below for $150 off. Thanks for watching. Help support this channel and receive exclusive offers from one of our partners located in the description. We'll see you on the next one.